Welcome back to the Atlantic Council at IMF World Bank Spring Meetings. I'm Josh Lipsky, Senior Director of the Atlantic Council's GeoEconomics Center, and this is our final event, number 50, through the week. We started on Monday. We've hosted over 20 central bank governors and finance ministers, dozens of analytical events. We've taken you through the key themes on the world economic outlook, debt issues, geopolitics. But what we'd like to do to wrap up the series of meetings here is speak with the team that has been involved in putting this all together to get their takeaways on these meetings. So I want to introduce Sophia Busch, Assistant Director at the Atlantic Council GeoEconomics Center, Mrugank Bhusari, Assistant Director at the GeoEconomics Center, Alicia Changani, Program Assistant at the GeoEconomics Center. This is a key part of the team that has made this all possible this week, and I wanted to speak to them, ask them a few questions, get their thoughts before we close out the week. So, Sophia, I want to start with you. We were in Marrakesh together. Gank, you were there as well. You and Gank helped lead our Bretton Woods 2.0 work at the GeoEconomics Center. But this is the first time both of you have been in a meetings here in DC. And I'm curious your perspective, the difference between going to a meetings outside of DC versus being at ones here in Washington.
Well, when you're in Marrakesh, you're a little jet lagged, so that's the thing.
That is a fair point.
But in all seriousness, it was the first meeting on the African continent in 50 years.
Yep.
And Morocco had just, had its devastating earthquake. It had just received a 1.3 billion loan from the IMF. So I think coming into that, there was already more of a focus on low-income countries and emerging markets. There was a much stronger focus, I think, on really trying to move the needle on the issues facing those countries. Because we were there, and I think you get these folks outside of DC, outside of their comfort zone, maybe, and you break the status quo, and I think it brought sort of a different kind of momentum.
Yeah, it is a different dynamic, I agree with you. And of course, the next meetings out of Washington are not till 2026.
Right.
People don't often realize, they think it's every year they go out of Washington, and that's in Thailand. So we have a long way to go before we have another meetings out of Washington. Gank, what were your perspectives, the differences between Marrakesh and Washington?
Yes, in DC there's a lot more, there's a broad-based representation. There's civil society organizations, private sector, governments of course show up in Marrakesh as well. But of course not everyone can, end up in Marrakesh. It's not possible for everyone.
Right.
And so you have a lot more perspectives that are represented in Washington, and you can see it around. You can hear civil society organizations, you can see them outside the IMF, you can see posters with Kristalina, with Ajay Banga. And at the same time, you also have a lot more meetings and a lot more discussions on topics that are not about economics and finance. Because all of these high-level delegations are here. You're talking with the State Department in the US, the Treasury Department, with all other countries that are not even the US talking to each other. So you have a lot more discussions that are not about finance, which is not, in Marrakesh it was much more focused, like Sophia mentioned, much more on the economics, much more on the finance.
I think that's a really good point. Sometimes people don't realize there are people who come to Washington and never step foot in the IMF or World Bank. They're just doing meetings all around the city. We would say to people, we'll meet you in the IMF, and they say, I don't have a credential, but I come to the meetings. And that is a different dynamic in Washington, because they want to meet with the Fed, and they want to meet with the State Department, and they want to meet with the private sector, and they use the opportunity to be here with everyone in one place. Alicia, I want to turn to you. We started this whole series of events a little over a week ago, it's hard to believe, with Kristalina Georgieva, the managing director of the IMF, giving her curtain raiser speech at the Atlantic Council, where she introduces the key themes of the week. You helped put that whole event together. This is your first IMF meetings where you're in the building here in DC. I'm wondering if you felt her curtain raiser themes carried through, because the purpose of her curtain raiser is to introduce the themes that she wants to see carried through during the meetings. Do you think it was successful on that front?
Yeah, I think, first of all, watching the speech, as a GeoEconomics Center, we're huge on data viz, so I had a great time watching the data viz. Her speech, it was a great speech. But I think one of the big things, and we've all repeated it, she said something called, expect the unexpected. And she really had a cautionary tale of what the global economic outlook would look like, and something that I wasn't expecting. She was talking about economic divergence, surging inflation, we're still feeling the scars of the pandemic, and geopolitical tensions. She wasn't wrong. A couple days later, the strikes on Iran, and indirectly, that kind of, in my view, kind of framed the meetings this week. There was a lot going on about, portraying this idea of resilience during divergence. We're bolstering cooperation, and a lot of talk about being prepared. And that's something that I saw during the week, and whether that was, fiscal buffers and rebuilding those types of things, but being prepared. And I think she was able to deliver that really early on in the week, and it kind of framed what I thought was the week ahead.
Yeah, it's a good point on the fiscal buffers, which is something the IMF likes to talk about, and they really hammered that home this week. You heard that often, about resiliency. Be prepared for what's coming next.
Yeah.
You may not be in your economy, given high debt burdens, ready for that, and you need to think about that. Gank, Alicia brought up geopolitics. I want to come back to you on the geopolitics point, because that's not always the most comfortable territory for the IMF. We're the GeoEconomics Center, so we think about geopolitics and economics together. That's not always how the IMF thinks about it. How do you think it framed the meetings for them?
So on Saturday night, Josh, when the news first broke out that there are rockets headed from Iranian soil to Israeli soil, I was actually scared that this is going to frame all of the meetings for the next week. But the day after, once market reactions came out, once we realized that a lot of different actors all across were trying to de-escalate the situation, at the IMF at least, the topics moved on to traditional macroeconomics, interest rates, inflation, exchange rates, and so just the traditional macroeconomics. And within this, like Alicia mentioned, the main theme that was going, the undercurrents throughout the meetings were expect the unexpected. Because since COVID, we've had a series of shocks every spring and annual meetings. There's some shock. We had COVID and pandemic, then we had inflation, we had supply chains, we had Russia's war, then we had war in the Middle East, we had a banking crisis last year. So there's just, you don't know what's coming to you. And building fiscal buffers, I think the IMF they called out, even the US, they used the word overheating.
Yeah, it's an interesting word that they use.
Controversial from the IMF standards, but at the same time, they keep talking about how many countries around the world are going to build fiscal buffers, they're going to have to pull back on fiscal policy, and I'm not sure with so many elections around the world, no government is going to start thinking about, let's spend less, elections are coming up, and the new governments that come into power are also not going to spend less because we're the new government, we want to spend a lot of money. I don't know how that's going to happen. I don't know how you prepare for these how do you build fiscal buffers in a year like this one?
Yeah. This is always an issue for the IMF, how the policy advice meets political reality. It's one thing for the macroeconomists to say you should do X, Y, and Z, but there are political realities in an election year, and the IMF produced some analysis on this, and I give them credit for that. It's really hard to do fiscal consolidation anytime, especially in an election year. That's going to be a reality for the entire global economy with 70 countries going to the polls this year, including some of the largest economies in the world. Sophia, I want to turn to the outcomes. They are supposed to actually have deliverables into these meetings. In Marrakesh, there were a series of high-profile deliverables. Quota reform was definitely big on the agenda there. What, from your perspective, were the major achievements or soon-to-be achievements of these spring meetings?
I think I'd like to highlight one on the World Bank side and one on the IMF side. And these, I think, maybe it's because it's the spring meetings, but this is less high profile than what we saw in Marrakesh. It's more along the sort of in the weeds side of things.
Okay, we like to do in the weeds here at the GeoEconomics Center.
We do. But so I think on the IMF side, there's reforms to the lending and official arrears. So this should help countries that are in debt, that are in distress, to still get support from the IMF, even if they're in debt to a member country. We've seen how important this is with, Zambia, for example, other countries. So I think that's certainly a productive change. And then on the World Bank side, they've made some reforms to streamline their process for guarantees. So what this does, well, hopefully it should help private capital be mobilized more easily. And it's really just one of those bureaucratic organizational things, but hopefully would make a big difference.
I think you identified two very important technical but very important things, because not every meeting can have the big flashy, this is what we achieve for the future of the international financial system. Sometimes it requires the small blocking and tackling, incremental progress. And the lending into arrears, while highly technical, is incredibly significant for countries because this will unlock funding for countries that couldn't get it otherwise. So I think those two, I agree, is kind of the substantive outcomes of these meetings, and important ones for the range of countries that will benefit from them. All right, final question. when we are next here, sitting at the IMF, it's going to be October, 6 months from now. What do you think will be on the agenda? It's always hard to forecast. You know, the IMF would say this, anyone would say this, forecasting is a tricky business. But let's try to do it as we wrap up this and help our audience look forward. So Alicia, let me start with you and I'll go down the line here. 6 months, October, the annual meetings. What's on the agenda for the IMF and World Bank?
Easy last question, Josh.
Yeah.
I mean, Gank, you brought this up, politics. 2024 is a year of elections, and I think that this is going to be something that the IMF will have to deal with, right? The US will be a couple weeks from their own election. India's in its election right now, so really looking at governments are going to be changing. You brought up the point about spending will be changing. It's going to be a different space, and so I think they're going to really have to look out for that moving forward.
Yeah, I agree with that. You know, the tenor of these elections happening 2 weeks after the IMF World Bank annual meetings with all the ministers and governors here, that is going to be quite the situation to navigate for everyone when we're back in October. Gank?
Well, on politics, there's two issues that I think everyone at the IMF World Bank this week has tried to avoid. One of them is, of course, US elections. Next time they just cannot avoid it. It's 2 weeks away. It will be really, really influential in what happens at the IMF World Bank. If Trump wins, I'm not, at least personally, not very sure of how exactly committed he is to reform of the World Bank IMF, if that is a priority, because it seems to be a priority for Janet Yellen, at least for the secretary right now. And the other question that really will be on the mind is IMF quota reforms. They delayed it in Marrakesh to June 2025, and they've avoided entirely this time because it's not urgent, but it will start becoming urgent next time. What do we do? The politics around it, there's no way to make everyone happy, which is why they delayed it in Marrakesh. You know, does the US lose its veto power? Is China happy with the revision it gets? Is India happy if China gets a greater revision than it does? Japan wants to remain number 2. So there's a lot of politics involved there. Europe wants to keep all of its seats. There's a lot of politics involved there.
We just ended a quota reform. I can't start another one, but you're right. The process will begin.
But Josh, I'm going to make a bet on expecting the unexpected. And I'm going to say a strong dollar is going to cause a lot of issues because we've had this narrative of inflation easing in the US for the entire year. In fact, President Joe Biden just said that he still expects one rate cut. Not that he has any power over it, but one Fed watcher.
One Fed watcher.
But at the same time, the data is not showing any signs. Chair Powell just came out saying he needs to see more data before they consider reducing rates. If the rate stays higher for longer, the dollar is going to stay stronger for longer. And then if we have new conflicts or new funds or anything new that causes commodity prices to go up, a lot of countries are going to struggle to pay those commodities, pay their debts.
Yeah, you identify a good issue because this was bubbling during these meetings. It didn't come to the forefront because it happened relatively recently, the stronger dollar and higher inflation. But I can certainly see in 6 months, if this persists as looks likely, the ripple effects, countries around the world are going to be talking about it. On the other hand, there's not little they can do. You know, the Fed is going to do what it needs to do for its domestic economy. But as the issuer of the world's reserve currency, what they do affects every other country in the world. Sophia, what to look for in October?
So I think one more concrete thing to look to is the evolving conversation on a wealth tax. This really came out pretty strong, I'd say, this week. So you had the G20 finance minister, Brazil's finance minister talking to the G20 about wanting to get something in motion, maybe by November, which is when they have the Leaders Summit. And so if it is November, that's the goal, then of course it's going to be a very key topic during the annual meetings. But I'd say, so that's one thing. But beyond that, I think there's like a bigger picture that needs to be addressed still. There's so much instability and geopolitics are changing so quickly. And we've sort of had conversations about this where the IMF isn't really able to respond quickly enough to capture the picture of the moment. And I think, that wasn't really something that was addressed this time. So I'm wondering if, over the next 6 months, if that'll be something that can be changed at all or not.
Yeah, I agree with you on both. First, there's always one issue during the meetings that pops up that you weren't expecting, and wealth tax was it for me, and you correctly identified it in several of our meetings with finance ministers as well. I didn't know that was on the agenda, and then it suddenly became very much on the agenda, and G20, Brazil has the presidency, as you said, and they want to take this forward, so I can certainly see that coming through in October. And then geopolitics. You know, the IMF just has to adapt to the new reality we're living in. I know, they wish this was maybe not the reality we're living in, but it is what it is, and economics and finance are intertwined. That's the nature of our work at the GeoEconomics Center, and the IMF has to play a role in that, and it's not going away. I think that's a key theme of this week. Sophia, Gank, Alicia, I want to thank you for joining me for this wrap-up session after an incredibly long and busy week, but most importantly, I want to thank the three of you for your leadership, your incredible work. You have brought the IMF World Bank project at the Atlantic Council to life. It could not happen without you. I'm grateful to work with you every day, and I can't wait to get ready and start planning October after we take a breather. Now,
so next week?
Maybe we'll do 2 weeks. I want to thank everyone, both at the Atlantic Council and around our programs and centers, not just the GeoEconomics Center, who have made this possible. The engagement team at the Atlantic Council, including our incredible audio-visual staff who are behind the camera right now, who have been with us here at the IMF headquarters for the last 6 days, making sure we could do this. And then in our studios in Washington, helping us produce over 30 events with finance ministers and central bank governors. These people are absolutely incredible and world-class to do this series of events, to bring these to you, to help explain what is happening in the world economy is not possible without their dedication and their hard work all hours of the day and night. And I want to thank my colleagues at the other programs and centers. We are the GeoEconomics Center. We cannot do this work without our partners across the regional centers and the other parts of the Atlantic Council. It's a true Atlantic Council project, not a GeoEconomics Center project. And I want to take a moment to thank them for making Brentwoods 2.0 and spring meetings at the Atlantic Council possible. I want to end on a note of looking forward. The IMF and World Bank turn 80, as they frequently have reminded us over the past few days. You can call it a birthday, or you can call it marking the occasion, or you can call it an anniversary. Whatever it is, they're turning 80. They were founded in 1944 in the midst of war, not after the war. The problem is, and I say this as someone who cares deeply about these institutions, they often spend too much time looking backwards on the past 80 years and saying to each other and saying to us about all the things they have achieved in those 80 years. And they have achieved an incredible amount in those 80 years. They have lifted billions of people out of poverty working with countries around the world. But the message we want to deliver and I want to communicate on behalf of the Atlantic Council is that is not enough to sustain these institutions for the next 80 years. What the world is looking for is what will you do for me in the future? And if these institutions continue to look backwards and pat themselves on the back and say, look at what we've done, we will not be here in 20 years at the 100th anniversary in these institutions, and certainly not in 80 years at the 160th anniversary of these institutions. These are not self-perpetuating institutions, the IMF and the World Bank. They have to be continually renewed by the membership, the 190 countries which are currently the members versus the 44 which founded them. It is their belief in these institutions that only makes them go, and their belief comes from the belief of the citizens of those countries in the institutions that the IMF and the World Bank serves them. So our message and the message of the Bretton Woods 2.0 project is simply this. The last 80 years are important and we should recognize them, but it's time to focus on the next 80. That's what we'll be committed to at the Atlantic Council. We thank you for joining us throughout the week. We look forward to working with you and all of those interested in supporting these institutions in the days and months ahead.